Welcome to the Texas Oil and Gas Podcast, the show dedicated to bring you the news from the oil patch deep in the heart of Texas, with your host, Ryan Ray and Josh Shelton.
Well. It's supposed to be Ryan Ray and Josh Shelton, but Josh Shelton is back to his old ways, vacation, taking time off, not really showing up for work, which is it's actually typical for him, but you people don't know him that well. So today we have a special guest host, the man, the myth, the legend himself. He's on mute. Let me see if I can get him off mute. There he is, Jay Young, Mr. Young. It's good to have you, sir.
Hey, good. Hey, great being on the show, man. I tell you, I'm honored. Was that you that was doing the yelling? The Yahoo, was that you?
Yeah, that's the one time I rode a bull. They recorded the audio.
Woo, man. That was definitely
put
hair on your whiskers.
Yeah, exactly. So unfortunately, Jay, part of the reason I asked you to come on today is we owe you kind of an apology. I think I don't know if apology is the right word. On this podcast, we've been wrong, I think, one time, maybe two times. But you, sir, were right. You predicted these high oil prices. You were a lot more bullish than most people I knew last year. And you're sitting here today, and WTI is at, 82, 81, 85, basically 82. How does it feel to be right? Indicated.
Well, I tell you, that's what the old my dad told me. He said, "Hey, when you get married, son, you can either be happy or you can be right? And and you can't be both when you're no, I'm just kidding. When you're married, no, I want to be happy, and I mean, when you're looking at oil and gas prices and you're looking at rig prices or rig, how many rigs are we using? Production. I mean, there's only like 4 or 5 things here, and it's not like it shouldn't be a real big mystery, and also a mystery of what's going to happen in the future. Man, unless Saudi Arabia bails us out, President Putin, Russia, man, we are going to have a problem with oil and gas. Where's the demand going? With oil and gas, it is not going anytime soon. Oil prices are not going to go down. We're not producing as much as we need to. And because we're not producing as much oil as we need to right now, we're going to be at the hands of the foreign countries because as demand goes up, our supply continues to go down. When I was in Midland last week, I landed in Midland. I took a Southwest flight, Midland. The plane was half full. See how half full, not half empty. It's half full. I landed. I went to the rental car place. I was the only one in line. And there was like Avis, there's all these different 4 or 5 different, nobody there. Airport's like, what's going on? And I remember when I had to buy a car and put it in Midland Airport just so I'd have a car to drive when I came to Midland. It was crazy. The hotel was empty, not empty, but half or something. And I asked him, I said, "Hey, does Midland know it's $85 oil or what?" Does Midland know what's going on here? And people are being just so incredibly tight right now. Well, look at Exxon. Exxon makes $6 billion last quarter, $6 billion last quarter. It's close to what Ryan Ray made on $6 billion. Just 1 or 2 zeros, whatever.
What's a few billion between friends? That's what I'll.
Yeah, exactly. What's a few zeros? But $6 billion last quarter, and they spent $10 billion. What? Drilling? No, they didn't spend $10 billion drilling. They spent $10 billion buying back their stock. Now, 2, 5, 10 years ago, man, they'd have spent $30 billion drilling for oil and gas, and you would have seen the hotels full. You'd have seen airplanes.
Mm-hmm.
Now going back from Midland, the flight was jam-packed. But it was a different story. There's just something's going on in Midland.
Yeah. We have a few comments here. One I take much offense to from Clay Gamble. He says, "I don't figure this is the only time Jay was right. If he talks to you, Ryan, very much. He must have been right several times. Now that's uncalled for, Clay. That's uncalled for. And so listen, folks. Josh is gone. You're supposed to be on Team Ryan today. Like that's how this works. When he's gone, you come on Team Ryan. So, anyways, yeah, it's really weird. So I saw this last year when I kind of toured the country right before the election. I was going around all over the kind of Midwest and to the East Coast, and you would kind of see these pockets of things where there's kind of no one operating as if we're anywhere back to normal, and then sometimes you go it's like, oh wow, things are kind of back to normal, and I don't think we're past that cycle fully yet. I think people are trying to figure out what's going on, and there's a couple things, Jay, that I think are driving this, which is, we're going into winter season, which is typically, flu season. So you're going to have some flu coming, some COVID coming, obviously concerns about that. But the more I talk to people, it's really hard, oil and gas and outside of oil and gas, to get a sense of how good the economy is doing, right? So if you turn on the official numbers, they're talking about how great it is. But I know, because I work with some ranchers to kind of move their beef, and I had several people like, oh, I'm not sure we're going to buy beef in November because we're kind of concerned about, Thanksgiving, Christmas, and the costs involved with that. So it feels like some folks at least are pulling back on their spending right now, which may be some of what we're seeing. And then to your other point, 85 oil, people aren't drilling. They're not. And so will that carry into next year?
I mean, it's not a slow process and that's what I've been interviewed on multiple radio interviews and things. And, one of the things that people were asking me, they're like, well, so, hey, Hal, let's just fix this. We're at 12 million barrels a day right now in the United States. Let's just fix this. Well, I mean, it's not like you turn on a spigot and all of a sudden millions of barrels of oil come flowing out of the ground. It takes a lot to do this, So, and what I mean by that is, people have acreage to drill on, then they get their budgets, and then they get their rigs, and they get takes 2-3 months, 4 or 5 months before the oil comes on the market. So, in my opinion, right now, if you look at rig count, you're not even seeing rigs moving up or rig counts moving up. A little bit in the Permian, yes. We're not back to where we were before. Before the pandemic, 5 years ago, we're at 1,200 rigs a day, 1,200 rigs a day that were drilling for oil and gas. During the pandemic, right after the pandemic, we're at 250 rigs, 250 rigs drilling for oil and gas. Now, for anybody out there that understands about rig count is, if you're not drilling for oil and gas, your production goes down. You can't, wells don't just continue to increase in production. They decrease in production. So you got to have the rig count to have production. So what happens is rig count hurts your production, which hurts your supply. You're not seeing that come around anytime soon. And if you don't have it come around anytime soon, it's not good. You've got to have rig count. And people just simply aren't doing it right now. They're not going out there and drilling new wells.
So you were at the Hart Executive Conference? Is that the conference last week?
Executive, yeah.
Yeah. So what was the sentiment there? What were they saying about going into 2022? Were they kind of optimistic or more stock buybacks?
Yeah, there was a couple of, and I'll tell you what, what's the guy's name? Clay from Devon, who's the COO, and a great guy. Really did like him a lot. I got to talking to him at a dinner at Midland Country Club on Wednesday night.
Not to name drop or anything, just hanging out with the COO Devon. Just
COO Devon,
not name
Midland Country Club,
yeah,
and hey,
it's just a casual Tuesday for Jay Young. Go ahead.
Exactly. Well, I had to pay $10,000 to be a freaking sponsor. That's the thing I was doing.
Oh well, you could have. Okay, you should have sponsored this podcast. You wouldn't have got the dinner to the country club or the meeting with Devon, but I would have been a bigger fan. You would have gotten that.
I know.
Josh wouldn't have cared, but I would have been a bigger fan. But whatever. Yeah. Go ahead.
But anyway, so I was talking to him and I said, hey, because Devon and WXP Devon bought WXP, so he came over from WXP. We were just talking about it. And I said, hey, so tell me about the transition and what's going on. How are you right now? How do you see oil and gas in the future? And let me ask you this. I said, Exxon made $6 billion. I know I use the same line on him as I use it. Exxon made $6 billion last quarter. They spent $10 billion buying back stock, not drilling. Are your investors doing the same thing to you? Because what happens is people on the board, that are on the board of these oil and gas companies are going green and they don't want to drill. And that's exactly what's happening. And that's what Clay said. Clay said the same thing. He said, yep. He said, man, our rig count will probably stay the same. And he said, I want it to increase so bad, but he goes, it'll probably stay the same. I forget how many rigs they have running right now. But he said it'll probably stay the same. So same thing with Clay and rig count. Now there's a lot of service people there, and people were hungry, and people, trying to go to work. But most of the sentiment was from most of the people on at the shows was pretty much, we're not, especially public companies. See who else was there that we can talk. But anyway, and somebody says something about that geopolitics that you moderated. I moderated something out there called the geopolitics, and talking about, that's exactly what's happening around the world too. Not only is about rig count, it's about being safe and being, when your politicians, cut down pipelines, when permits are hard to get on federal lands. I'm looking at a great deal right now on a federal land project, but I'm scared to death that Biden will come in and bam, cut off all the. I mean, I think he's coming around though. I think he's coming around. I mean, what was it? I was on Fox last week too at Windmill, and there was my co-host or my co whatever it was speaker was working on the pipeline, and he said as soon as Biden got elected, 2-3 hours after he got elected, or 30 minutes or whatever, he came in and said, nope, we're done on the pipeline, and he lost his job. Can't find his job again. So that's exactly what
that's Stu, I think.
That's Stu?
Yeah, for some reason Stu likes to be cloak and dagger on here, but yeah, that's Stu. So a couple more comments. Someone said Clay said they have 9 rigs running, to answer your question. And then another commenter mentioned publicly traded companies, shell companies committed to keep production flat, max to 5 to 10% increase. Okay, and that seems to be, so we have a couple issues here, right? Which is the longer we keep production kind of flat, it on some level it is kind of good for the industry to return to investors to get the profits going. But as far as the general economy and what that's going to do to prices, that's kind of a separate discussion. And then the third leg is, what about the labor market, right? So what happens to all these people who are kind of hanging on? Because we keep hearing from people that there's not a lot of jobs out there. They're struggling to get back into the business, and they're thinking about leaving. And so, I don't advise people on what to do. That's kind of up to them. But I understand why they're saying that, because if companies aren't going to drill, then what do you do? Do you sit around here at oil and gas, or do you get into real estate, or to telecom? I talked to a guy the other day at a service company. He said telecom the next 10 years. That's where they're focusing at. If oil and gas comes back, great, but they're going to telecom. So how does all those things weave into 2022, Jay?
I'll tell you, that's a great question, and I really do feel like that when we're not going to continue. Public companies, they have access to more capital than we do as private companies. And the institutions are simply just not investing in oil and gas right now. They have other ways to invest, or other things that they can invest in, whether it be real estate or crypto or whatever outside investments they have. There's other things that they can invest in besides oil and gas. And so a lot of the institutions are saying, we're not investing in oil and gas. Well, if we can invest in oil and gas, then what happens? Rig count goes down. What happens when rig count goes down? Yep. Less oil in the market. Less oil in the market. We get back to the same thing right now. Is oil and gas prices will go up, and we can't do anything about it.
So how high will we see oil go then? You think if we see a 5 to 10% increase potentially from the publicly traded companies, which is not a lot, How high do you think prices will go in 2022?
I mean, it's a great question. A great thought is I can't really say, and I don't really think they're going to go above 100. I don't think they could go, and OPEC says 200. Bank of America said 100. We've had a lot of Goldman Sachs and things saying 120, 140, 150. The one thing that's going to keep us down from oil and gas, right before the pandemic, if you'll remember, Saudi Arabia and Russia flooded the markets with oil, flooded our markets with oil. They were selling oil at such deep discounts. And why were they doing that? Because they tried to put us out of business. They tried to put the independents, the publics out of business. They caused 100 bankruptcies because what their countries do is this is how they make money. If they don't sell oil at great prices, their countries don't make money. In the United States, we don't really care if we make money or not because of Biden and his $1 trillion. That's a different story. But that's another segment, and probably has to do a lot more with something else than Texas oil and gas.
Well, we've been accused of being a right-wing propagandist podcast. So if you're going to come out here with your right-wing points, I will have to critique you to show the leftist colors. So I'm just saying.
But really, what I'm getting at is that these countries, how they make their money, they may produce 8 million barrels a day in oil, and only their country only needs 3 or 4. So that 4 to 5 million barrels they're selling on the open market, and they don't want the United States oil price to go to 120, 150, because what happens when oil price go to 120, 150? Everybody gets in the oil business. Everybody is, and prospects are plentiful, and people pay all kinds of money for everything, and and we produce more oil. And when we produce more oil, we don't need them as much. And when we don't need them as much, that's what they don't like. So I believe, this is my thought, and I could be wrong, but oil price go to $90, $100, they're going to start stepping on the gas a little bit with their exporting, and they will keep oil over here at a safe price for them. But it's also an incredible price. 1,000 barrels a day at $90 a barrel is making our investors 60, 70% returns. It's crazy numbers, because of what happens with the price of oil.
Yeah. No, it's interesting because as the prices get higher, you expect. So we've touched on this a few times on the show, but I haven't heard, and maybe it's out there, I don't get to follow news all the time, but go back to pre-pandemic time, just to use that term. We were flaring natural gas because you couldn't do anything with it. You'd lose money. Well, now you've got natural gas at $5, whatever it is. Oil's at 81. Think about having a 70-30 split well out there in the Permian. You get $80 oil and $5 natural gas. Like, now is the time to be drilling. And it's so weird that we're not. And so you'd expect these Permian companies to have better returns because they should make money off every well now, theoretically.
Exactly. But if permits, and like Colorado, we've got a project right there. We could keep 1 rig or 2 rigs running in Colorado right now without question. But because of regulations and because the government, what's happening over there, we can't get it. We can't run those rigs, and if we can't run those rigs, we're not producing it. So that's hurting us. Regulations is hurting us. Permits on this federal land, they're hurting us right now. Capital, there just isn't the amount of money going into these projects. And it's also rigs, or not rigs, as I say rigs, when I say get a rig, it's like we're looking for a rig right now, and they're making sure that they have the people. That they have the people. They have the iron, they have the rig I went by the other day, and I was riding around Midland, just riding around, just looking at different service companies and what's going on, and I saw a lot of different companies we've done business with, and you see these rigs stacked. Rigs are stacked in their yard, but there's not people, because if somebody's making $1,000 a week, they go from making $200-300 a week to making $1,000 or $1,200 in the oil patch, and then their lifestyle gets up to that $1,200, and then they get let go for 3, 4, 5 months. They go back to work for Walmart or a gas station or something that they can count on that check, and if they're married, I know they're going to want to go back to the $1,200 or $1,500 a week paycheck.
Right.
They don't, because they need to feed their families, and mama wants that safety. So it's hard to find good people right now. So you have a lot of things going against you. Permits, regulations. You have institutional money pulling out of the markets. You have people that say we're going green. We're gonna be recyclables and renewables and all this, which is keeping a lot of board members from these public companies on saying, let's don't drill for oil and gas. All right, well, if you want to keep 9 rigs running, which is what I saw a minute ago with Devon, that's okay. Don't go to 12, 15, 18, which they should. They have the acreage. They definitely have the acreage to drill for that many and that many locations that they could drill, but it's just not happening.
Yeah. No, it's interesting times, and so we'll see. So we have to get to the winter to see what happens with demand. So I saw that I think it's I don't remember Goldman who it was. They're predicting now that we're going to exceed the 2019 100 million barrel per day demand. If that happens going into 2022, because they're expecting long international flights to come back, so they're looking ahead, seeing that there's not going to be more lockdowns and more shutdowns, so demand's get back. Long international flights are not there, and so that should help push past that 100 million barrels a day threshold. And if you do not see an increase from OPEC or the U.S., then it's hard to know how we're going to rein prices in. But to your point, I do think that is something to consider, that OPEC would be concerned about prices staying above 100 for too long, because then you could see a crash the other way.
No, definitely, and it's like every project is every project out there is economic. There's more formations to drill. If we're drilling a well and we have a Wolfcamp A, B, C, and D, and the A is what's the most economic, at producing, because it costs you, if it costs you $8 million to drill a well at $80 a barrel, well, it matters how much oil is going to come out of the ground. Those three make up an internal rate of return. And if you're making 800,000 barrels of oil in the Wolfcamp A, well, the Wolfcamp B may not have 800,000 barrels. It may only have 200,000 barrels. Well, man, at some part, 200,000 barrels is economic. And that's what happens is that's when people start going crazy and money's thrown at them, and they're like, oh yeah, well, we can drill wells and 200,000 barrels is economic. Let's get out there and drill wells, and they're drilling wells that aren't economic at 60, 40, 20. So the cycle happens. My family's been in this business 100 years. Over and over again. We've seen the crash. We've seen the ups and downs. That's why with our funds, we have 6 different assets. I'm looking to take the money off the table. Once we drill a well and get some wells going, we sell one of our projects. So it's a challenge right now. The challenge right now is getting the right rigs in the right places.
So there's one guy, if you say you're looking for funding, he says he's got it all day. And someone else says private companies don't have a problem with funding. I don't know about that. I've heard mixed things. So the problem with the private companies is there's so many of them, it's kind of hard to get a read on each one. So I think if you're about a PE-backed group, it's going to depend on the thesis and the sentiment of the PE group, right? So if they have a large green or ESG favorable portfolio, then yeah, those guys could see trouble, but not all. I talked to a guy last week and he was pretty optimistic, and they weren't having any trouble as well. But anyways, so I think it's just kind of hit or miss. Okay, Jay, you have kind of touched on this, and you're kind of going on all these small shows. You talk about Fox, I think BBC. I don't know why you're wasting your time on them when you could just come on here, but tell us what you got going on.
Well, I'm just getting our word out about what we're doing with our fund. We have a $25 million equity fund. We've got a $10 million credit line starting out, and we're going to go in here and drill up 6 different assets in 6 different spots. I'm looking at a 7th for our fund this year. So, I'm just getting our name out there to see what we're doing, tell everybody what we're doing. And we're looking at, investors. We have a $200,000 positions that people can come in and participate with us. The tax write-offs are big this time of year. People like the write-off. We may have a $100,000 position available. So we're just finishing up our equity raise right now. We're pretty much done with what we have. So we're good on the sense of our oil and gas company and buying up these 6 different assets. We have people in each one, and what they do is they look at what we're doing, how we're doing it. Like right now, we're drilling a well in the Mid-Continent and the Panhandle right now. We've got a rig that's getting ready to drill 2 wells up there. We've got a workover rig in West Texas, the Permian. And at that point, when we get some more science done, we're going to have a rig drill some wells in the Permian. And then also, too, we've got an East Texas project that is a project that we can drill 2 wells, 2 long lateral gas wells there, 10,000-foot laterals. So, our goal is to drill that project. It's right next to a lot of public companies, but it's a 2-well project that's by itself, and we can go in and drill that project up, sell it for $35 to $45 million by end of next year. That's our goal. So people always ask, what do you do? Raise an equity fund. We have a debt component with our credit facility. We're buying 6 different assets. And if out of 6 assets, I'm looking to grow each one of them to a certain value. And if I'm successful with, half of them, clients will get a 5-to-1 return. If I do one of them at a good, I'm just looking for, monthly revenue, tax benefits, and that overall investment for our investors. And we're doing an outstanding job. Our team of people that I'm on a call with here in 3 minutes is an incredible team that knows how to look for projects, how to scale them. I mean, it's like my buddy in the real estate business. I mean, he loans people money to go out and buy a home and flip it. So a guy finds a house and says, okay, this is $100,000. If I put $50,000 into it, I could probably sell it for $200,000. So he loans them the $150,000. We're doing the same thing with the assets that we have in our portfolio. We have multiple portfolios of oil and gas projects. We look to scale each one of them and return that back to our investors.
All right, Jay. Well, it was good to get you on. I don't know if we'll be able to get you on before the end of the year, but if not, happy Thanksgiving, New Year, Christmas, all that good stuff. But maybe we'll get you on one more time. But it's November, man. It's crazy. Like the year's almost over. So you start looking at the podcasts we have left. It's like, oh, we're right up against the clock here. So if not, we'll talk to you next year for sure. And best of luck to you guys over at King Operator. Listeners, thank you